Well, thank you. Thank you very much, Raleigh. Thank you to all the people at the Trading Pub Trade-a-thon, to Raleigh and Yana, and also to all the attendees today. Thank you for joining me. Today's presentation promises to be a really good one because I'm going to give you a great technique that I learned while I was trading on the floor and which was taught to me myself, and which is, in other way to say it, the right way to trade tops and bottoms. Once again, I am the president and founder of Specialist Trading. My name is Stephen Primo. And a little bit more background about myself. As Raleigh stated, I did start on the floor of the Pacific Stock Exchange. So my background is in stocks. But what we do at Specialist Trading is teach and mentor not only stock strategies and techniques, but also techniques and ways in which to incorporate them with currency pairs as well as the Forex markets. Now, I traded through the crash of 1987. I traded through the great bull market that followed after that, and I left the floor to pursue my own trading. And so what we do at Specialist Trading is we are first and foremost an educational company. It's not our philosophy to just simply force feed you signals and have you take them without having any idea what you're really doing. I've traded long enough, 37 years, to know that the real basis for consistent trading is sound education and becoming a part of the process. So too many traders, we feel, in our opinion, are really taking themselves out of the game by relying on an outside source to tell them what to do. Either this can be someone in a trading room or a chat room or some trading guru or some fantastic system that you just purchased, but you really have no feeling or understanding of why you're buying or selling. So what we do to all of our students and what I mentor my students around 70 countries is to personally teach them all of these things, to how to become a part of the process with all this education that stood the test of time. And everything I teach and mentor are things that I actually use in my own personal trading. Now, before I give you this great entry technique for trading that you can start using as early as today if you like, I just want you to take a moment to view our disclaimer. I'm going to show you a lot of performance results using this entry technique, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So as you're taking a moment to view our disclaimer, I would also like to invite each and every one of you to follow us on Twitter. There is our handle right there, abbreviation for Specialist Trading. It's at SPCLSTTRADG. We post a lot of great and free information there on a daily basis, anything from daily financial wisdom to actual signals that we're currently in. In fact, we just recently posted something yesterday which is the indication of a trend change in the markets. And there's a great posting there. So you might want to try and follow us and just make sure that you get our handle right there, our name, at SPCLSTTRADG. Okay, now as I stated in the very beginning of the presentation, Specialist Trading is first and foremost an educational company. We feel that the only way we will get all of our students and members to that level of consistency, which I know what everyone is searching for, is through sound education. And the reason I say this and the reason I teach this way is because this is what helped my trading. I know a lot of you may think, well, boy, you know, it's easy to make money because you have a background in stocks, you probably have an education in that and economics, and so you basically, you know, had all this advantage going for you so that you know how to actually trade with all the training. Well, that's not true. In fact, I had no prior education before I started trading in the markets. I wasn't even involved in that field. And when I got on the floor, that's really where I learned everything. And once I became a specialist, sure, I thought I had a license to steal, but believe it or not, in the first year or two, I couldn't make a dime. In fact, after I had been trading for a while, I was right back to the level of just a beginner because I was doing everything that I had been taught. In other words, I was reading all the books. We didn't have chat rooms or trading rooms then, but we had subscriptions and newsletters. I was watching TV and all the news and all the trading gurus, and I had virtually about 10 or 20 indicators on my screen that were supposed to work. So I had everything that was supposed to work, and nothing worked. Actually, I would have maybe 3 or 4 good trades in a row where I thought I was on track, but it was always the 5th trade where I gave everything back, and I literally mean everything back, and I was right back at zero again. And so I didn't think I was going to be on the floor that much longer. In fact, I thought my career as a trader was probably going to come to an end, and I was going to have to look for another type of employment. It wasn't until a few other traders on the floor, these were specialists themselves who had been around for 30 or 40 years, saw that I was really, struggling, and they came to my aid and they became my mentors. And what they said is that, Steve, listen, you're totally overcomplicating your trading. And what they taught me is that basically 99.9% of the things that we have learned or are supposed to work, conventional wisdom really doesn't work. Because if it did work, then 99.9% of all traders would be successful. And as Raleigh said, you're going to hear a lot today, the majority of traders ultimately fail. And when we say fail, we don't mean that you're going to go into some small drawdown or loss. It really means that you're going to lose your entire capital for trading. So I was right in that boat. I had a very difficult time. I couldn't make ends meet, and I was doing everything that I was supposed to be doing that was right. So my mentor said, Steve, the way to consistency is to strip away all of these things that you've been taught that are supposed to work and to keep your trading as simple as possible. And that's how ultimately it changed my way of trading, and ultimately it got me on that road to consistency. Because what they said is that, it's not about hitting home runs. We're not here to make millions, even though I know there are a lot of educators and a lot of websites that promise you that you'll be trading and making, sustaining yourself and making a living within the first couple of weeks by trading their system. It's not about that, because when I was on the floor, I knew literally hundreds of traders who really hit the jackpot, who've made hundreds of thousands of dollars, if not millions of dollars, in a relatively short time, and not one of them is still trading today. They've given it all back. So it's not about how much you can make. It's about this consistency in your trading, because that's what will sustain you so that you can be trading 10, 20, 30, 40 years down the road. That's really the meaning of success, which is basically longevity. And what my mentors taught me is the way to get there is to simplify your trading, keep it as simple as possible, and to use sound, basic information and education that has stood the test of time. So this is what we instill in all of our students, all of our members. We don't just force feed you strategies and tell you what to buy or sell. We try to educate you and then work with you to mold a strategy or technique so that you can get on that road to consistency, okay? So that's our little philosophy about specialist trading. What we do here, as I said, we are first and foremost an educational site. All right, now let's start off, and we're going to show you right off the bat how most people trade tops and bottoms. And I say this once again from experience because this is the way I used to trade. I'm going to start out showing you some older charts, but towards the end of the presentation, we'll go into some newer charts that are as recent as yesterday. But also I'd like to mention, please, if you happen to have any questions, just wait the last 10 or 15 minutes. This won't be a real long presentation, and I'll reserve the last portion of this for any questions. So if you have any, just kind of remember them, and then we'll get to them at the very end, okay? All right. Let's begin now, and once again, this is how most people trade tops and bottoms, and I say this from first-hand experience because this is the way I used to trade on the floor. After all, this is the way I was taught, and conventional wisdom told me that this is the proper way to trade tops and bottoms. Now, in any type of market, in any type of scenario, if you are trading tops and bottoms, and we'll start out with stocks here as well, for all you stock traders. If you're trading any type of tops and bottoms, what you need is basically some type of tool or an indicator, or just, it could be something that you've devised or something that you listen to that tells you that you are in a so-called overbought condition or you are in so-called oversold condition. Now what I've done here is plotted a chart. As you can see here, this is Cat Tractor, and all I've done is plot your standard slow stochastic on the very bottom of the chart. All right, there's nothing that I've edited, nothing that I've even changed. In fact, I don't even know what the settings are. All I did was just simply hit slow stochastic, and it appeared at the bottom of my screen. All right, so all we're really looking for are some type of parameters. Here is the overbought parameter right here. In other words, when price, or I should say the indicator, crosses above this line, conventional wisdom tells us that we are in so-called overbought territory. And conversely, when we cross below, we are in so-called oversold territory. So that's how simple it is. And so here's the way most people will trade. When you see the lines crossing over on the so-called oversold territory, this is where you will jump in and buy. Okay, let's say you had done this with this particular example. Well, it worked out pretty well, and you had a nice profit going until you saw that we got in the so-called overbought territory. So you decide now to sell, and you have a nice profit there from your long, and why not? You went short, and guess what? That worked just as well. In fact, that worked even better. So now you're short, and you wait for price to go into so-called oversold condition, and you cover your short, and you go long. At this point, you're probably thinking that you're going to retire in the next couple of months because it's just too easy. Now you've had it all figured out. And so you buy, but this time it really doesn't go up. In fact, it doesn't go up at all. It goes a little lower. But after all, we're still in the so-called oversold conditions, and the lines have crossed again. So why don't you buy some more? So you double up, and you decide to buy some more. Goes up a little, but then it goes back even lower. So now you triple up, and this way, if you triple up, you don't really need it to rise that much in order to gain back all of the losses. And at this point, you've given everything back. In fact, everything you made in the first 2 or 3 trades is totally gone, and you've lost everything. Now, does this look like any familiar trades that you may have taken? Once again, I say this from experience because this is the way I used to trade. Now, you will not only see this phenomenon in stocks, you'll also see it in futures. Let's look at an older chart of the E-mini S&P. Same conditions apply here. We have the same overbought, oversold, slow stochastic. All right, we're looking at the overbought, oversold threshold. On this, I believe this is a 5-minute chart. We can use the same technique where we are in the overbought territory, so we short, and it comes in the so-called oversold territory. The lines cross, so we cover our short and go long, and then we go, then we buy, and boy, it looks even better. Now it's going right back up again. So you think you can do this all day and make tens of thousands of dollars every week. So you sell again, and now you are short. You've got 2 really good trades under your belt, but this time it doesn't go down. But it really doesn't go up that much either, so you decide to short some more. You double down, and it goes higher and then higher, and you've given everything back you made on the first couple of trades. Once again, the exact same scenario, different market, different time frame. And we can also apply this same phenomenon to the Forex currency pairs. In fact, you'll see this more in the currency pairs because they trend so strongly. If we look at this older chart of the Swiss franc, we see here that we have the overbought conditions. So obviously what you want to do is sell. So let's say you had sold here. Well, it never went down. In fact, we never went into the so-called oversold condition. So you decide to sell some more. You sell some more. And then ultimately, you've blown out your account because it just continues to go higher and higher. And at this point, you are most likely hiding your account statements from your significant other. Why? Because you joined the ranks of that 85 percentile group where ultimately you lose everything. This is the way most traders trade tops and bottoms. It's very similar to gambling or a gambling mentality because it's similar to playing the slot machines. Because the slot machines give you this false sense of security that you're actually doing well, but over time you have nothing to show for it. In other words, if you're playing the slots or just gambling and giving away your power and letting the slots decide for you, every once in a while you'll hear a bell or a whistle or you see the money chink down there and you'll think, boy, I'm doing pretty well. But if you stay long enough, there is no consistency. You'll actually see that over time you haven't made any money. In fact, you've lost. It's the same process with trying to trade tops and bottoms. You will have every once in a while some very nice trades, some big winners, and you'll tell yourself, boy, I'm on track, I'm doing extremely well, but then you'll have 1 or 2 trades where you'll give everything back and nothing will seem to work. In other words, this type of technique will work until it doesn't work. And I'm sure a lot of you are going through this and you'll see how discouraging it is. And I know exactly what it's like because, as I stated, this is the way my trading was for the first year on the trading floor of the stock exchange. And I was tremendously discouraged and I was tremendously frustrated because I was doing everything that I had been taught. I was looking at overbought and oversold. I was using indicators. I was using the correct money management. I was in sync with what I thought was the trend or bucking the trend, but it wasn't working. There was no consistency. So my mentors saw how frustrated I was and how despondent I was because I had put so much work into trading and trying to be successful and nothing was showing results. So what my mentors taught me and what I'm going to teach you today is that you have to get this mindset set first in your brain. You really have to get this really and understand this process, and that is there is no such thing as overbought or oversold. Okay, I'm going to say that again because I'm sure you're going to hear that a lot possibly today, that there is overbought, oversold conditions. But what my mentors taught me is there is no such thing as overbought, oversold. We've all seen markets, regardless of what time frame or what they are, continue to go higher and higher and higher and be in so-called oversold territory for weeks, if not months, if not years. We've also seen things go all the way down to zero. We've seen stocks just literally dissolved into bankruptcy and gone into zero. So there's no such thing as overbought, oversold, because issues will go as high as they want to or as low as they want to. Every once in a while, you'll get on the right side, which will give you this false sense of security. But ultimately, it's really a recipe for disaster to try and stand in the way of the speeding train. So they told me that you really have to get this mindset first, all right? Change your previous mindset and get this mindset first that there is no such thing as overbought or oversold in order to trade. And it took me a while, but ultimately I did accept it, and I did feel like, okay, I understand now. After seeing other examples and looking at charts, I realized that, okay, there is no such thing as overbought and oversold. Well, then what is the correct way to trade tops and bottoms? And what they taught me was the right way to trade tops and bottoms is simply to go with them. And I thought, what does that mean to go with them? How do we go with them? And so this is the technique that they shared with me, and this is the technique I'm going to be sharing with you. Okay, you can apply this to any market, any time frame. It does not matter which direction or which time frame, or if you're trading stocks, currency pairs, or the E-mini. All that matters is that I want to make sure you understand is this is simply an entry technique. I'm not giving you a full-fledged strategy or system with all the rules for exit, all the rules for money management, for stop placement. This is just a great entry technique that you can apply to any market, any time frame. You can apply actually to any strategy that you're currently trading, and I really feel it'll ramp up your odds for success. Now, later on in the presentation, I will be telling you about a strategy where I'll give you all the rules. But remember, this is just one piece of the puzzle. It's just simply an entry technique. All right, so let's look at the chart we looked at before. Remember, we wanted to trade cat tractor, and we literally lost a lot of money trying to pick a bottom of it. Now, here's what my mentors taught me. They said, Steve, the first thing you must do, regardless of what market, regardless of what time frame, is to always apply a 50-period simple moving average on your chart. And then once you've applied that, you ask yourself, where is price in relation to the 50-period simple moving average? Now, you may want to write that down. I'm going to say that again slowly. Where is price in relation to the 50-period simple moving average? Because once you ask yourself that, you'll only come up with two possible answers. Price will either be above, or as you see here in this example, price is below. Now, if price is above, we are only looking for buy setups. It does not mean we're going to buy at the market. It means we're only looking for buy setups. But if price is below, as it is in this example, then we'll only look for sell or shorting setups. Can you see how simple this is? You see how it just eliminated all the guesswork of trying to figure out, well, if something's overbought, oversold. We already know now that the only thing we're going to be doing is looking for shorting setups. It's that simple. See, it's simplicity that will get you on that road to success, not overcomplicating your trading. So what we want to do now is look for short. Now, how do we do that? Well, we're going to exploit the overbought, oversold conditions, because remember, there is no such thing as overbought, oversold, so we want to exploit that. So what we do is we look at our tool here, and remember, it does not have to be the slow stochastic. It could be any indicator that has or generates a so-called overbought, oversold condition. It could be something that you've devised. It could be based off of the full moon. It doesn't really matter. It could be something that you go to a chat room where someone tells you that this issue or equity is overbought, oversold. We are simply going to exploit that. So with this particular example right here, we're going to exploit the indicator on the bottom, the stochastic. And since we're going short, we want to first find all of the so-called oversold areas right here circled in red. This is what we're looking for. We're looking for oversold conditions. We want to exploit them because we know there is no such thing as oversold. And then once we've found them, we want to identify all of the short-term bottoms that were created, but only in the so-called oversold conditions. So if we look here, if we see, I'll get out my pointer, we are in the so-called oversold conditions right here. Here's where a bottom was created. We are in more oversold conditions here, and we have two other bottoms created, and so on. Now, there were other bottoms created, such as right here or even right here, but they were not in oversold conditions, so we're not going to be concerned with them, okay? So that's what we're looking for. We're just simply looking for or identifying so-called short-term bottoms that were created in the oversold conditions. And once we trade 1 to 5 ticks or pips below them, Well, we are going to enter and short. And that's it, because remember, we are exploiting or taking advantage of a so-called oversold condition. So we're going to simply just jump on board and sell. And now you see how we had nothing but winning trades. Why? Because we are in sync with the market. And we're not trying to play, that gambling recipe for disaster of picking a top or a bottom. Remember, we were trying to pick bottoms in this stock originally, and we lost all the money we made on the first couple of trades. Now, we haven't had a losing trade at all because we just simply entered as we were going lower and lower and breaking those oversold conditions. Let's look at the other market we checked out, and that was the E-mini. All right. First thing we do, if we're going to be using this technique, is we add a 50-period simple moving average. We ask ourselves, where is price in relation to the 50-period? Obviously, price is above. So if price is above, we're only looking to go long. We're looking for long setups. It does not mean we are buying at the market. It just simply means that we're looking to go long. Any setup we see must be a long setup. Once again, you see how simple this is. Before, we lost a lot of money trying to pick tops in this particular 5-minute chart. Now, we're simply in sync with it because we're going with the overall trend. So since we're going long, we want to identify, firstly, those so-called overbought conditions. Okay, that's when the oscillator is above the so-called threshold. I believe it's 80 here on this particular. And once we are above there, we want to identify all of the tops that were generated or created when we were above. So if we see here, once again, here's a so-called overbought condition. Here's a top that was created. Here's another overbought condition, and these were the tops created all along the way. These are the ones we want to exploit. So if price trades one tick above there, that's our signal to enter. And so all we want to do is just simply wait and we enter. And you see now that we didn't have a losing month, or a losing, I should say, this is a 5-minute chart, a losing day or a week trading. Now we have nothing but profits in front of us because we're exploiting so-called conventional wisdom that really has no consistency to it. And then lastly, we can look at the Forex chart here, the Swiss franc. Once again, we literally lost our entire account trying to short this as it went straight up. It would have been much easier to simply apply the 50-period moving average, ask ourselves, where is price in relation to that? Obviously, price is above, so we have no business trying to short this. You literally have no business trying to short anything above the 50-period moving average because the odds are against you that it's going to work out. Sure, every once in a while it may work out, but once again, it's always the third or fourth trade where you give everything back. Remember, we are looking for consistency. We're not looking to hit home runs. So since price is above the 50, we want to find the so-called overbought conditions, and then we locate all the short-term tops that were created in those overbought conditions. And once we trade 1 to 3 pips above them, we just simply jump on board. And now, where before we had nothing but losing trades trying to pick a top in the Swiss franc, now we have nothing but winning trades because we are in sync with the market by being above the 50-period moving average, and we are exploiting what conventional wisdom tells us should work, but we know there's no consistency in it. Okay, so these are examples now of looking into the first week of December. Remember, once again, this is an entry technique. I see some of you may, this is always the same question I get when I do this presentation. Where's your stop? Where do we exit? This is an entry technique. We teach you all of this in the course, and I'll talk about that at the end of the presentation. All right, so let's start out with some current examples here with stocks coming into the first week of December that just were about a week ago. Okay, we see here in cost, we see here that we are above the 50. So what does this tell us? It tells us that we're only looking to go long. Now, there was a short period here. We had 1 or 2 days below. So we were also in the so-called oversold area. So we could have used that to go short. But if we look at the overbought and oversold areas, we want to identify where the short-term tops and bottoms were. And you see the bottom on the far left, we never went below that. So we never activated any type of short. But as we go forward, we did activate the longs, and you see how you would have had some very nice profitable trades. You can also look at APA, okay, Apache Corp. Where is price in relation to the 50 period? Price is obviously below, so there's no reason in the world we would want to buy or try to pick a bottom in this. It's a really, once again, a recipe for disaster to try and pick tops and bottoms, especially in something trending so strongly down. Sure, you could have made some quick money if you tried to pick a bottom later on the right portion of the chart, but you had been very quick. It would have been much easier just simply to locate the so-called oversold areas, then identify the bottoms that were created in that condition, and then go short. So much easier, so much simpler way to trade, with really without a lot of stress and keeping things really as simple as possible. If we look at Yum, we see here that this is coming into last week, so it does not reflect what it's currently done, but that's okay. We would have been able to get out with still a nice profit because I believe the stock has really fallen out of bed as of late. But at the beginning of this chart, we were below the 50-period moving average, so you would have tried to identify the so-called oversold conditions to go short. And you could have identified the bottoms that were created and gone short and made a couple, 2 or 3 or 4 points going short using this technique. Once we had 2 to 3 valid closes above the 50, well, now we're looking for long setups. And then we simply locate the overbought area, identify the tops that were formed, and those are our entries. Now, it would have been very easy to make some nice profits in here, even if you had just taken the very first trade, as you've seen right here. And we had a very nice move all the way up. And I know Yum has fallen out of bed and come down, I believe, somewhere around here, but you could have placed a stop somewhere at this level, below this low, and locked in the profits from here to here. How about SLB? This is the ETF for silver. So this works, once again, not just stocks, but also in ETFs for different commodities. Obviously, silver coming into the first week of December was, or November, I should say, was below the 50-period moving average. So there's no way we wanted to try and pick a bottom in silver. The only thing we're trying to do is go in sync with the trend. And therefore, we want to go short and exploit the so-called oversold conditions. All right? Once we've found those, all we have to do is simply locate and identify the short-term bottoms that were created in the so-called oversold conditions. And look how simple it is just to go short. Now, had you tried and bought silver in August, September, October, coming into November, you would have had a very difficult time and you would have lost a lot of money and probably would have said, boy, this trading thing isn't for me. Everything I was taught about overbought, oversold, it doesn't work. Once again, I know exactly how you felt. This is the way I used to trade. It wasn't until my mentors taught me these simple techniques that I saw how out of sync I was with trading. And for some reason, we're sold this, these ideas that this is supposed to work. The only reason is because when they do work, they go off with a lot of bells and whistles, and you make a lot of money very quickly, and you think, boy, this is great. But when they stop working, trust me, you give everything back. So there's no consistency there. Remember, our goal is to get you to be a consistent trader, so you can be trading 20, 30, 40 years down the road. That is the secret to success, longevity. And here's a chart of crude oil coming into last week. Obviously, crude oil has been going lower. Anyone who's been trying to pick a bottom in oil has literally, lost a lot of money and had the bottom fall out on their P&L. It's much simpler to ask yourselves, where is price in relation to the 50-period moving average? Obviously, price is below. There was one point where it crossed above there, beginning of October. Remember, we need 2 to 3 consecutive closes either above or below to tell us that we are now on a certain side of the 50. And then once we even cross above or below, it does not mean that we are looking to buy at the market or sell at the market. All it means is we know what side of the market to be on now, whether we're going to be looking to be a buyer or a seller. But we never have to, decide, well, what should I do here? Is this a buy setup or a sell setup? We already know right off the bat, looking at this chart, that we're only going to be sellers in crude oil. That's all we're going to be doing. So we look for the so-called oversold conditions circled in red. Once we found them, we just identify where the bottoms were, the short-term bottoms were, and then we just jump in and sell. And now, you see how our members and our students have been making money trading crude oil using this technique. Why? Because they're in sync with the market. They're not in any way trying to pick a bottom here. And then lastly, we can look at this on the E-mini S&P as well. Now here is a weekly chart of the E-mini starting in 2012. So we're looking back all the way 3 years roughly. And if we ask ourselves in this last 3 years on a weekly time frame where price has been in relation to the 50, obviously price has been above. So even though we've had these minor sell-offs here and there, it was really in our best advantage to be long the E-mini or the S&P 500 index on a weekly basis. Why? Because we've continued to stay above the 50-period moving average. So until we have 2 or 3 weeks where we close below the 50, we are going to continue to be long or look for long setups. Now, since we're looking for long setups, all we do is identify the overbought conditions. That's when price is in the so-called overbought area. And then we identify those short-term tops that were created. And look how easy it would have been this last 3 years on a weekly time frame to make money in the E-mini. You could have even used this as a short-term trend identifier, okay? You don't have to literally go long the E-mini or go long the S&P 500 index on a weekly basis. You could just say, well, hey, we keep going above the previous highs in the overbought territory, so all I have to do is know that we're still going to remain long or look for long conditions. Now that's a weekly time frame. We can go to a 60-minute time frame. All right, this was a couple of weeks ago. We look at a 60 or an hourly time frame. In the beginning of this chart, we are above the 50 period, so we're only looking for buy setups. Those are our so-called overbought areas. So all we have to do is identify the tops that were created and use them to go long. Now, it was a little choppy here and there, and then we crossed and we had 3 distinct closes below the 50 period. So now we're looking to go short. So now we have so-called oversold territory, and we just identify the bottoms that were created, and now you can go short. So a lot of people say, well, what happens when the trend changes? Well, we just simply reverse sides. So before we were only going long, we're not trying to pick a top, and now we're only going short. We're not trying to pick a bottom. Now that was on an hourly time frame. We can look and see what happened yesterday. You know, I know a lot of educators and presenters will talk and show charts that are maybe a year or two old. You know, I like to show things that are extremely recent. So I took this snapshot yesterday. This was on an intraday chart of the E-mini on a 1,000 tick bar chart. This was the close coming into yesterday, coming into the 10th. Okay, we see how coming into the prior day before yesterday, we crossed above the 50-period simple moving average. So in the last hour or so, you could have taken advantage of maybe 2, 3, 4 points very quickly in the very last hour. And then coming into yesterday's opening, we see here that we opened below the 50-period simple moving average. So now we're only looking to go short the 50, all right? Yesterday was a day that we went lower and lower. I wish I would have been able to have more examples for you from yesterday's action, but I had to submit this to the Trade-a-thon people in order to have it posted. So I wasn't able to have an entire chart. But just showing you right from the beginning, there's no way we really would have lost money trading yesterday because the market was below the 50 period on this 1,000 tick bar chart. So we were in sync right off the bat by looking to go short the market before we fell out of bed 200 points. So as you see here, the opening sell-off, we were below the 50 period moving average. We look for those short-term oversold conditions, and then we just exploit them once we traded 1 or 2 ticks below. That's how simple it is to be in sync with the market. So I just showed you a weekly chart, an hourly chart, and now a tick bar chart, and show you how this technique works in any market in any time frame. And then lastly, I want to just show you how well this can be applied to the Forex markets. And it's been my opinion that this actually works even better in the Forex markets because they trend so strongly. And that's what we're looking for. We're looking for a real strong trend. We want to be on the same side of that trend. And then we want to exploit those overbought, oversold conditions because most people will try to buck the trend. They'll tell themselves, well, it's gone up too far and too fast. And so it's way, all my conditions or the guy I listen to, the trading room I go to, or the guru I listen to, or all my indicators are saying it's tremendously overbought, so it has to come down. Or you'll see a tremendous trend where it's going straight down, and you'll say, well, you know what, it's never been this low before. Everything is telling us that it's at historic lows. It's tremendously oversold. So you got to buy it here. There's no way it can go any lower, okay? So once again, we're just going to exploit that because remember, as my mentors taught me, there is no such thing as overbought or oversold. So let's look at some examples here in the Forex currency pairs. Here's a weekly chart of the British pound. Okay, so going back a year or so to 2013. And as we see, crossed above, I believe in September of 2013, we are now above the 50-period moving average on the left portion of your screen there. So since we're above, we rode it all the way up until this year, mid this year, and we were just long the markets. Okay, this simple technique, entry technique. Once again, this is not a strategy. This is not a system. We're just giving you a great entry technique if you like to trade tops and bottoms. So you could have gone long and made literally thousands of dollars just per lot here trading the British pound. But as we see here, and coming into August, September of this year, we crossed below the 50-period moving average. So now we're changing gears on a weekly time frame, and we look at the so-called oversold areas, and we found the short-term bottoms that were created, and we use that to go short. Now, I know a lot of people would say, boy, this is great, Steve, but I don't have the money for the risk parameters associated with a weekly time frame. All right, so what a lot of our traders like to do, even though this is not a requirement or any type of our rules, but this is a suggestion, and a lot of traders swear by this, so it's fine. As long as they're doing well with it, we're not going to stand in the way. But they like to use a higher time frame to discern what the lower time frame is, even though, once again, this is not required, and I personally don't trade this way because higher time frames, in my opinion, don't necessarily tell you what the lower time frame is going to be doing. Let's just see. So if we were in August below the 50-period moving average on a weekly basis, well, let's go down to a daily time frame. And we see here that if you wanted to trade the daily bars, once we cross below, once again in August, well, you can apply the same technique because a lot of traders feel confident that they are in sync with the higher time frame. So we could just apply the same technique. We look for the so-called oversold conditions, and then we locate the short-term bottoms that are created. Remember, we're not in any way going to go long the British pound as long as we are below the 50-period moving average. Well, let's just say you say, well, Steve, that's great, but I am not a day trader. I like to intraday trade. Okay, I like to maybe look at hourly or 4-hour charts. A lot of Forex currency pair traders like to look at 4-hour charts. Okay, so let's use this as the higher time frame, and we can see that we are below the 50-period moving average coming into the first week of December since August. All we have to do is now look for that on a 4-hour time frame, or 240 minutes. And once we cross below, we are now in sync with the higher time frame. We use the same process, identify the so-called oversold conditions, and then look for the bottoms that were created, the short-term bottoms, and then we can fit our risk parameters, by having less risk because we're trading in a smaller time frame. So you see how you can use this many different ways. This is a great technique. Once again, just an entry technique, but we've shown you how it applies to stocks on daily bars. We've shown you how it applies to the futures on weekly, hourly, and even tick bars. And then lastly, we've shown you how it applies to Forex currency pairs on just about any time frame you want. So this is a fantastic technique, but remember, there are a couple of things I want to leave you with. Two very important points to remember. Even though you can start applying this as early as today, these are extremely important points to remember. Firstly, just as my mentors taught me, never, ever try to pick tops and bottoms. I know there are a lot of techniques and a lot of traders out there that will tell you that this is the best way. You're going to buy at the low and sell at the high. And I'm not saying that it doesn't work for them. In fact, I know a few traders who only trade this way and do very well. But you see, they have some type of internal chart or internal wisdom that tells them when the right time is to sell at a top or buy at a bottom. That's very difficult to teach. The majority of us can't find it or can't trade that way. I know personally I couldn't. So as an educational company, we're trying to teach things that are cut and dry that the masses will understand, not just one or two people. So as I stated, there are probably a few traders that can trade this way that do very well. But as an educational company, we're trying to teach you things, strategy, techniques, rules to live by so that you'll have consistency, because it's very difficult to teach that inner chart that they are seeing, that these particular traders are seeing. Therefore, since the majority of us aren't able to do that, never ever try to pick tops and bottoms. I wish someone had told me that when I first started trading on the floor, because I would have saved a lot of money and a lot of grief and hardship, just sleepless nights wondering if I was going to be able to make it. And the reason why is because there is no consistency in it. Remember, it's very similar to the slot machines. every once in a while they will give you this false sense of security, and you're thinking that, boy, I'm doing very well. I've had some nice winners here. And then ultimately you'll get that one day or that one trade where nothing works and you give everything back, and you say, boy, I was doing well, now I'm right back at zero, or even worse than that, I have a loss for the month now. And I was doing really well, and now I'm giving it all back. And that's the worst feeling as a trader, is to know that you are doing well, making money, and then you give it all back, and now you're in the hole. So with consistency, it's more of a two-step forward, one-step back. In other words, you have a couple of good, small little golden nugget trades, and then maybe one or two small losses, but then you can quickly recover and have two steps forward, one step back. This is the approach we try to instill in all of our traders. From time to time, we will hit home runs, but that's not what we're looking for. We're looking for these nice, consistent setups, and then we want to have our P&L reflect that by having a nice upward slope. Not a roller coaster, the way I'm sure many of you have your P&L looking at this point, where it goes straight up and then straight down, straight up, straight down. We want consistency. You have this nice upward slope in your P&L. So the way to do that is by never, ever trying to pick tops and bottoms. And how do you remember not to pick tops and bottoms? Well, keep telling yourself. You may want to even write this down and post it on your screen. There is no such thing as overbought, oversold. Trust me, I was trained just the same way you were. I went to all these seminars. I read all the books. There was nothing online then because we didn't have the internet, but I had all the subscriptions to the newsletters. And everything, I was taught, I'm sure you've been taught as well, that something is overbought, you have to sell it. Something is oversold, you have to buy it, okay? There's no such thing as overbought, oversold. Once my mentors instilled that in me, I saw all the different markets, all the different time frames where things would go up as high as they wanted to, and things would go down as low as they wanted to. So it really was a recipe for disaster for me to try and stand in the way of a strong trend. It was much easier to simply go with it. So please remember, what we teach to all of our students is that there is no such thing as overbought or oversold. Okay, in closing now, before we go to the question and answer portion, I want you to ask yourself, and ask yourself honestly, do you think this edge or any of the edges I shared with you today could have helped your trading this past year? In fact, great edges, not only did I give you the entry technique of how to exploit so-called overbought, oversold, but how about the technique of the 50-period moving average? I don't know if a lot of you, if you're familiar with that. This was taught to me once again on the floor by my mentors as well. But almost as a homework assignment, just go back and look at your last 10, 20 trades. I can almost guarantee you that the reason why you had some losers was because you were out of sync with the simple rule. In other words, if price was below, you had a buy setup and you were buying below the 50-period moving average. Or if price was above, you had a sell setup and you were selling above. I can almost guarantee that the reason you have a majority of losers is because you're out of sync with this simple rule. So ask yourself, is there anything we shared with you today that could have helped? Remember, we're an educational company. We're not just simply force-feeding you signals. We don't want to do that. We want you to understand and become a part of the process. It's my opinion that the only way you can get to that level of consistency is becoming a part of the process. That's why we don't have chat rooms or trading rooms at Specialist Trading, because we feel that many traders will turn that into a crutch, and they'll try to emulate or take the same signals that the operator is telling you, or the room operator, or the head trader is telling you. We don't believe in that. We want you to find your own way and take the trades that meet your style and your persona. So we've just given you two great edges today. Hopefully they can elevate your trading to that level of consistency. What if I could offer you 3 or 4 more? What about 6 or even 8 more edges? Well, if you'll bear with me, I just want to take, before we go to question and answers, to talk to you about this great offer we have for all the attendees of the Trade-a-thon today. This is a 3-hour video, which we call our Secrets of a Stock Exchange Specialist training sessions. About 2 years ago, I was asked to speak in front of a large crowd in Denver, Colorado. And we had hundreds of people were there, and they spent good money to see me speak for 3 hours and give them a lot of great information, hopefully to elevate their trading. What they did at the seminar was videotape it for us, a high-quality videotape, and now we have the 3 hours of trading techniques plus a full strategy. So in this 3-hour training session, you get many more high-probability trading edges, such as the ones I shared with you today, but we give you entirely different ones as well. We tell you which indicators to use, and most especially which ones not to use. I go into the difference, and it's very extremely important what the difference is between a system and a strategy, so that you can ultimately know what you are trading and what your persona is geared for. Also, extremely important, I tell you what I feel is, in my opinion, the #1 chart pattern. You should be looking for this chart pattern in 3/4 to 80% of all of the buy or sell setups you get, because this will give you a higher level of consistency. I think probably the most important thing about this 3-hour training session video is that I give you the complete rules to probably one of our most consistent pullback strategies. That's strategy #1. In fact, let me just show you some current setups that our members that are part of the strategy #1 course were privy to, seeing these setups in the last couple of months. We look here, we see here in this stock, we had some very nice buy setups on the 23rd, the 7th, and the 16th. And we see here that as we get these buy setups, you notice that all the setups are right around the lows. Now, I know a lot of you may be saying, well, Steve, I thought you didn't buy on the lows. You didn't believe in that. Remember, we only buy pullbacks or consolidation patterns. What I gave and shared with you today was an entry for a consolidation pattern. But pullbacks are always in sync with the trend. So the overall trend will still be up. Strategy #1 just does a great idea of picking those bottoms to buy on the pullback. If we look here, we also see that we had some nice sell signals as well. Here was one on the 6th. We were kind of going sideways to flat, and there was a bounce in the market. I know a lot of people would have thought, well, boy, in fast we stopped. That it looks like we bottomed out. We're going to go higher. But the strategy generated a sell signal, and look what happened. Okay. Now, if we look here in this chart of, I believe this is Netflix, we see here that the stock was going sideways, not much was happening, but 2 sell signals were generated, one on the 7th, another one on the 9th, well before the news or some announcement or something came out where the stock literally gapped down hundreds of points. Now, please remember that we only listen to one thing, and that's the market in front of us. Remember, I told you, when I first started trading, my trading was extremely overcomplicated. Why? I had tons of indicators. I was listening to all the news, where all the earnings were going to be. I had all these subscriptions. I was going to all the seminars. And for all my time and effort, nothing was working. What my mentor said was, Steve, make your trading as simple as possible and only listen to one thing. And that's the most important thing. That's the chart in front of you, because basically it tells you just about everything you need to know. Now, as we see here, if we look in this chart, Netflix, the stock gapped down tremendously lower. It wasn't as if the company called me up a week before and said, Steve, why don't you let all your students know that we're going to be gapping down, so why don't you generate some sell signals so they can be privy to that nice sell-off? Well, no one told us anything. The only clues we got were from the market itself. So a week prior, the market was telling us that most likely we're going lower, and that was using strategy #1. So this is how great this strategy is for identifying pullbacks. And if we look at charts here, we look once again at weekly charts. We can see here that going all the way up, we generated buy signals. Look at how we generated buy signals, I believe, in the E-mini here, right at the very bottoms of these sell-offs, where a lot of people were thinking, well, okay, we've topped out. We're going to roll over, and now it looks like this is the market. The market has topped out. Well, strategy #1 said, no, the market is telling us that we're still going higher, and these are just pullbacks. So let's enter and get some nice purchases here on these lower prices. You can also go to different time frames. This is a smaller time frame, trading the E-mini, and all the way while we were going lower, all these little bounces that were happening in the E-mini, you could have applied to go short. And then lastly, once again, this works in any time frame and in any market. We can also apply this to the Forex currency pairs. You see here that at the very low, we had it purchased by, I believe this is the Swiss franc or the Canadian dollar. At the very low, we had another sell-off, another purchase, and we had another sell-off. Just to tell you that, not everyone is a perfect setup. This trade right here on the 24th, you may have gotten stopped out, but we're just showing you how all the signals are generated. But another great signal was generated a week later, so you could have jumped back in. So the full rules, okay? Remember, what I gave you earlier today in the presentation was just an entry technique. This was just a technique for entering that you can apply to any strategy you currently have that trade tops and bottoms. But in this 3-hour session, what we're sharing with you is 3 hours plus a full strategy. So I'm going over about 6 or 7 or 8 more techniques, just as I shared with you today. Plus, on top of that, I'm giving you all the rules: entry, exit, stop placement, money management for strategy number 1, probably our most consistent pullback strategy today. Remember, all these techniques I share with you apply to any market, any time frame. And also, once you purchase this, you are a full-fledged member of Specialist Trading. That means you have my personal email address. You can contact me whenever you'd like. I have tons of emails I get on a daily basis. In fact, I was answering them before I started this presentation today. But I will get back to you as soon as possible and answer any questions. So you always have some type of rapport with me while I'll answer anything. So this is a 3-hour trading techniques plus a full strategy. We offer this on our sister site, which is Pro Trader Strategies. We offer this for roughly $1,000. That's how valuable it is. But because of our association with Trading Pub and all the good people here and the Trade-a-thon, we are dropping this down, unbelievably, down to $37. This is a 3-hour video, online video course. So this is nothing that has to be shipped or mailed to you. This is nothing that dissolves after a couple of weeks. It's yours for life. You get the link, excuse me, you get the link. You can view it as many times as you like. You can look at it at your own leisure or whenever you like, and it's yours for $37. All these techniques, such as I just shared with you today, plus a full-fledged strategy, which is entirely different, strategy number 1. $37, but this is for a limited time only. So I see that if you're interested, let me just give you all the information for this. If you're interested in getting this, I believe that Jana has posted our link there for the special offer. You can contact our sister site. That's protraderstrategies.com. They market and promote all of my strategies and courses. And you can contact any one of their trading consultants by emailing them at trading@protraderstrategies.com or call them directly at area code 310-598-6677. Now you see there's the link right below the phone number, and so you can copy and paste that, but also I believe Jana has given you that link, that hyperlink, where you can just click it on the screen in front of you, and it'll automatically take you to the discount page. Remember, that's only $37. I think probably the majority of you probably spent more than that just alone in commissions just yesterday. This is a 3-hour video course of a seminar that I gave in front of hundreds of people in Denver, Colorado a few years ago. And once again, on our website, if you go to Pro Trader Strategies, you'll see that that's listed for roughly close to $1,000 just for the people at the Trade-a-thon today. And because of our association with Trading Pub, we dropped that down to $37, but for a limited time only. Okay, so there's all the information you need. And I want to thank you all for waiting to have any questions. Just let me see and backtrack here. I'll take any questions now, and I'll leave all this information on the screen just in case. Steve says it will be the best Christmas gift you can get for yourself. Thank you. I hope so. William says, Steve, could you bring up Forex live chart and show us a setup happening live? Well, you know, I don't have the William is a good student and member. I'm sorry, I don't have any of the live charts access right now. This is a static PowerPoint presentation. But if you send me an email or whatever, I can check it out for you. But there are a number of setups we have currently in a number of Forex currency pairs, as well as the market. We have other tools and other indicators. For each course, we have upwards of 8 to 10 different strategies. Okay, so you can purchase an entire full course, which is very expensive. It can run up to $5,000, but that's with roughly 10 strategies and all of my, it's basically a private mentorship. But we also sell individual strategies starting roughly about $400 or $500. But this is by far the most concise information you can get for roughly $37. You get a full-fledged strategy. Okay. Mo Thomas asks, what % accuracy do these strategies have in general? Well, remember, you can only monitor accuracy if you everyone trades the exact same way. Okay. And remember, I stated this is an educational company. Now we have, in our education, we teach you how to trade aggressively. We teach you aggressive entries. We also teach you conservative entries. We teach you conservative exits, aggressive exits. We teach you how to stay in the trade as long as you can to squeeze out the most profit. We also teach you conservative stops, aggressive stops. We have roughly 4 different stops placements in our different courses. So there are a million and one ways to trade. It's just too difficult to try and backtest and say, well, how does it work? Well, what time frame are we talking about? Some of our traders only trade tick charts. Other traders only trade weekly charts. And remember, as I stated in the opening moments of this presentation, we are simply an educational company. We're not a a fact-based company where we generate numbers, because honestly, we don't believe in that. I have traded systems in the past. I've taught systems for other companies, and I've shown no consistency in them, because once again, they'll work until they stop working. The only thing that we've found that really works over time in my own trading is when you become a part of the process. So this means I can look at a chart and trade it entirely differently, even with the same setup as someone else. But I might use a conservative exit, where another trader might use an aggressive exit. He may make a little bit more than I, or lose a little bit and have a less of a profit. Either way, we still have the same setup. It's just too many different ways in which to calculate what the numbers are. But you can, if you're having trouble in trust, or you feel, well, how do I know? Do a Google search on specialist trading and on myself, Stephen Primo, and you can see all the satisfied customers we have, people that have traded our techniques and gone through my teaching and education. Remember, we are there for you every step of the way. We trade right alongside with you, and we're there to help you mold all of these techniques and edges so that you can feel comfortable and trade and get on that road to consistency. We want you to make your own decisions. I do not want you to come and say, well, Steve, what do I buy or sell today? Tell me what to do. That is why I feel most traders lose. So there's no way to quantify what the statistics are, because everyone trades differently, okay? If I give you a quick story, when I left the floor in the mid-90s, I had a number of traders who wanted to learn from me, so I had them come over to my home office, and they sat with me, and I taught them exactly how I traded on an intraday basis. They knew all my rules, all my setups, and we studied for a good week or two, and until I finally felt that they understood it. Okay, and then after they were on their own for a couple of weeks, I wanted to call them back and see how they had done, because I had done very well those past couple of weeks intraday trading. When I talked to each and every one of them, everyone had different results, and the majority of them had lost. And the reason was, after I finally figured it out, because I couldn't initially understand, because we were looking at the same setups, the same rules, is because everyone approaches the market differently. Some traders are extremely cautious, and they couldn't take my setups. It was too difficult for them, and perhaps too fast in a small intraday time frame. Other traders were more aggressive. What I was trading was too slow for them, so they jumped the gun. They didn't follow the rules. So then I came to the realization that no one trades alike. You cannot tell someone to take the same signals that you trade. And the reason is because everyone is different. Therefore, you have to become a part of the process, take some foundation or guidelines, use them as your format, but then apply 30% of your own discretion to trade it, okay? So that's really the reason why there are no statistics with any of our techniques. Let's see, the next question is, 1,000 tick bar chart mentioned in your presentation means 16.66 minute time frame? No, actually, that's pretty complicated. All it means is that each tick, each buy or sell is a tick. So in other words, every time there is a transaction, that's one tick, regardless of if it's a buy or a sell. So after 1,000 ticks, a bar is formed, and we form a new one. That's all a tick chart is, okay? As opposed to a 5-minute chart where you basically close the bar after 5 minutes and start a new one. It's based off time. This one, tick charts, are based off of transactions, okay? I hope that makes sense. Trevor asks a very good question. How do you avoid a ranging market where the price triggers an entry and immediately reverses and stops out? One of the best ways for that is by applying what I shared with you, the 50-period moving average, okay? If price is well above there, most of the times you won't be getting in these ranging markets. Usually you're only getting in ranging markets when price is oscillating above and below the 50-period. And so therefore, remember, we need 2 to 3 closes above to tell us for buy setups. We need 2 to 3 closes below to tell us for sell setup. If we're bouncing and oscillating above and below, we will never know what side to be on, and that therefore is keeping us out of the market. So one of the best things about these tools that we teach and mentor is that even though there is no 100% guarantee that sometimes we won't get caught in whipsaws, many times our techniques actually keep you out, keep you on the sidelines. So oftentimes the best trades are the ones you don't take. So because of our proprietary techniques, which are extremely simple, as you just saw today, you will be out of chop rather than being in a trade and avoiding the chop and with some particular rules or strategy. We won't even be in a trade. We'll simply wait till the chop is dissolved and we're back resuming the trend. Okay. Let's see. Let me see the next question. You are more than welcome. Any reason why you use 100 tick charts? Hi, Kenny. No, there's no reason. I just wanted, the only reason I showed tick charts was basically just to show you how this technique will work in any market in any time frame. As you recall, when I showed you a lot of stock examples, I just used daily bars. I showed you weekly, intraday, time frame, 5-minute charts. I also showed you tick bars, and then I showed you 4-hour charts in the Forex currency pairs. The reason why is because I know a lot of educators will just use one time frame and tell you, look how great it works. Well, I know that not everyone, once again, trades the same way. Not everyone just trades daily bars. Not everyone trades intraday bars. So I want to show you a vast variety and show you how well these techniques work in any market and any time frame. You see, our philosophy is if something has consistency to it, it should work in any market and time frame. It's not that we have to change it to match the market. This should be the same all around, so we keep things not complicated. In other words, we don't use a 50-period moving average for stocks, but for E-minis, we use a 20-period exponential, and for currency pairs, we use 100% weighted. You know, that's too complicated. Just keep things simple. Use a 50-period moving average for all markets, all time frames. Decide on which time frame is best for you, which comes through paper trading, and then just apply these simple techniques. Remember, I'm not telling you that you will not see some great buys below the 50 and some great sells above. You will see them from time to time, but that's not our approach. We're trying to instill consistency in all of our students. And when you use these simple techniques, that's how you'll get on that road to consistency. Not about hitting home runs, because you can just as easily give it all back, as I know firsthand. It's not about that. It's about creating simple, sound, educational techniques that have stood the test of time, that will have you trading 20, 30, 40 years. I'm going to be starting my 38th year of trading next year. Okay, so that's, you know, firsthand that this really does work. But it's also because I'm a part of the process. So if you look at traders who've been trading for a relatively short time, 5, 10 years, most of the techniques are extremely complicated. They have some network technique or lots of indicators or a lot of subjectivity. But if you look at the traders who've been trading 20, 30, 40, 50 years, most of their techniques are extremely simple. Maybe 4, 5, 6 rules tops, maybe one indicator, and that's it. And these are indicators that you don't have to create or purchase. They're right there on your software. This is what we provide for all of our students, okay? Yes, my name is Primo, and if you do a Google search on me, once again, you can see my background and where I've traded. And so I have been trading for 38 years, and really I'm more and more just becoming an educator, because most of my time now is given to presentations and speaking and mentoring all of my students. Let's see, Tom says, I just ordered a $37 deal, but I did not want any add-ons. I never got an indication that my order was... all I can say is, don't worry, Tom. For $37, nothing is happening that you're going to be upset with. I would just contact, as you see right here, trading at Pro Trader Strategies. Ask them these questions, or you can call them directly, and they'll make sure everything's fine for you. Okay? Don't worry about anything not processing or processing twice. It's probably just some technical issue, because we've seen many times when we give other promotions such as this, we have so many people coming at the same time, sometimes the system gets overloaded and you will not get processed any type of verification. So take your time and kindly send them an email or call them directly, and they'll take care of you, okay? Thank you. Yana just posted the email address for you right there. Well, I can't send out the email address now. If you contact us through, as a student, a member of Specialist Trading, you should have my email. So contact the people at Specialist Trade, I should say at Pro Trader Strategies. They should be able to have a way to contact us. Okay. In closing, I just want to say thank you so much for attending today. Thank you to all the people at Trading Club for inviting me. And also, I want to really strongly mention that usually what traders do at the beginning of every year is they make themselves some type of a list or goals they want to achieve. They say, I want to be making so much money a week with my method, or I want to be trading so many markets or so much time a day. And usually, if you look back, once we get towards the end of the year, none of these goals have been fulfilled. It's extremely depressing. Once again, I know this firsthand because it was the way my trading was. And you look back and you say, boy, I put in so much hard work. I did so much analyzation. I went to so many presentations. I spent so much money, and I don't have anything to show for it out of all my hard work, and nothing turned out the way I wanted to. Well, I really feel strongly if you come aboard as a member of Specialist Trading, especially with the inexpensive offer of $37, you can get your trading back on board for 2015. If you really want to elevate onto that level of consistency, which I really feel everyone is searching for, then this is a great place to start. For only $37, you get many more techniques, such as I just shared with you today, plus a full-fledged trading strategy, strategy number one. I don't know where you can pick up all this information just for that short or small of a price. So if you're really serious about getting your trading onto that level of consistency for 2015, I strongly suggest that you take advantage of that and become a member of mine at Specialist Trading. I look forward to all of you becoming students and members of mine at Specialist Trading. In closing, I just want to say thank you so much for attending today. Thank you to all the people at Trading Pub, to Raleigh and Yana for giving me the opportunity to speak. And thank you for all the attendees of the Trade-a-thon. Okay, I think that's about it. I hand the mic over to Raleigh. And once again, thank you so much. I look forward to all of you becoming members of Specialist Trading and Pro Trader Strategy.